Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast, and I'm your host, Beau Eckstein, and today we're going to talk about how to get a bridge loan for a multifamily property. So what is a bridge loan exactly? Bridge loans are for acquisitions for an unstabilized property, essentially. So the debt service coverage ratio might be 1 or less than 1%, meaning that the income coming in does not pay for the debt. If it's a 1%, it means the income coming in is just breaking even on the deal, right? So banks and lenders usually look for a 1.2 or 1.25 debt service coverage ratio, which means there's enough income coming into the property to cover the debt service payment. Well, a bridge loan is designed to, like a Band-Aid, right? You come in, you acquire this property, and with that funding, you raise the occupancy levels of the property. So let's say it's a 100-unit building, and right now you're at 70% occupancy. That's not going to qualify for agency debt, so you got to look for typically a bridge loan, right? And bridge financing, sometimes they'll lend 75% of cost. When they say of cost, they'll lend 75% of the acquisition price and 75% of the CapEx or renovation budgets.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
So that's kind of a standard formula for a decent bridge deal, and they're usually anywhere from 12 to 36 months, depending on the deal itself, the location, and so forth. So that's how they look at these deals. So they're going to look at the sponsorship group. They're going to say, okay, what have you done in the past? Have you ever done a value add play where you're taking a property that's and it needs a big rehab and it's got 30% vacancies, and you gotta manage it correctly and get the occupancy level up to 90%, because you typically need a trailing T3 or a T3, which is a trailing 3-month P&L, before you can refinance it. So the idea is to get the occupancy level up to 90% for at least 3 months, and then you have a trailing T3, which you can submit to the lender. So that's what agency debt's looking for. Now there's certain ways to get past some of these, and sometimes that's why we might bring this loan request to a credit union or a bank who don't have such rigid guidelines as Fannie or Freddie on the occupancy level of the property. They want 90% or better for at least the last 90 days, right? So that's where we get creative and we figure out other structures. Maybe you don't want to go into a bridge loan because the financing isn't as good as maybe we can get you with bank or credit union. So that's the kind of the comparison. But bridge loans, all in all, are very useful. We have a couple lenders that do higher leverage type financing. They'll go up to 85% of costs for experienced sponsors. So you can get really high leverage that way. So lots of ways to do it, lots of ways to structure deals. I like to give these little kind of 2-3 minute segments of different tips, for financing commercial properties, both stabilized and unstabilized properties, as well as construction and creative financing, all wrapped up into the Investor Financing Podcast. Hope you enjoyed this, and we'll see you on the next episode.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.